Hey everyone, welcome to Trade with Nick. This is Nick Pham, and today I'm going to teach you guys what one of the most popular trading strategies are over the last few years, and this is the 0-day DTE and the SPX. So a lot of you guys know the S&P 500, the SPX here is the #1 index that most people trade, and I'm going to switch this over to max, and this is the S&P 500 over the last 100 years, and look at how it's grown exponentially, right? This graph shows you what the S&P has been doing ever since 1929 till now, and what you'll notice is it's been growing exponentially, and the index usually does not grow exponentially like this. It usually grows more like a steady in a steady way, where it's returning maybe 10-12% return a year. But over the last 10 years, since 2010, you'll see down here 2010 to 2025, look at this exponential growth where we went from 1,500 all the way to 6,920. This is not typical of an index. This is something more typical of a biotech or an internet stock, right? And so is this sustainable? Most likely not. But if you were to ask me if this was sustainable back in 2020, I would never have thought that it would go all the way up this high. So we never trade what we think. We always trade what we see. And so one of the strategies that you can do is you can actually day trade the actual index by doing options on the index. So if you think that the index here is going to stay below 69.36, which is right where it's at right now, you can actually go to the trade tab, and you'll see under options, you can trade options on the SPX. And what an option is just a bet on the stock. And if you want to actually make bets where you think the stock is going to stay above or below a certain price by expiration, we have what's called 0 days to expiration. In other words, this particular bet will expire at the end of the day, which is in the next 45 minutes. And you'll see these spreads are relatively tight, right? And they're always moving, these option prices. But what you'll also realize is, let's say I wanted to sell an option, and right now it'll tell you that the buying power is going to be $683,000 if I wanted to just sell naked. All right, well, if I don't want to sell naked, maybe I can sell a put spread. So if I want to sell a call, or on this side a put, and then buy a put for a $10 wide spread, I can reduce my margin. It's only going to cost me $846, and I'm going to get $155 of profit. So that's one way to do it. But what you'll realize is if I do this, I need at least $25,000 in, and I'm filled as my first trade right now. And you'll see on my monitor tab, I'll show you how this is actual day trade, because this trade expires in 45 minutes. And if I open up this trade, you'll see sold one of the 680.30 put. So this is a bullish trade. If I go into my 1 minute chart, this is assuming that I think it's going to bounce above 6,830, right? And as a day trader, especially towards the end of the day, I do not like to hold this till expiration. I'm actually just going to get out of this trade once I make a certain profit. Here, you can see the profit loss is up, down, 250, break even, right? So since I sold this position, you can see in my order fill, I sold it for a credit of 170. I can just quickly get out of this trade before the day ends. So if I just go here and I create an opposite order, I can actually get out of this trade by buying it back for cheaper. So since I sold it for 170, let's say I buy it back for $1.30. You'll see that that would be a $40 net profit, right? So this is buy to close. So if I click send, what that means is on the chart, what's cool is you can actually see where the price will necessarily need to go before it exits the trade. I'm going to put in a stop loss right down here at 68.31. Or what I could do here is go in here and create a duplicate order and say, I'm going to buy this if it gets past my certain price. So this, I'm going to sell, oops, actually, this is going to be buy to close, create opposite order, because I'm going to buy this at a stop price, right? So this is limiting my risk. I don't want to risk too much. So this thing gets up to about $2.50. I sold it for $1.70. Let's give it $100. Stop. If this gets up there, it's going to get me out of the trade. And on the chart, oops. Actually, let me actually delete this real quick. I'm going to create an OCO order, meaning I'm going to delete this order. This is my filled order. This is my working order. I'm going to cancel the order, and I'll show you how you can place an OCO order so that you don't even have to be. So here, you know, down about $5. Now we're up $2.50, and you can see all of that based on the price of the stock. And I'm not betting directionally. I'm just doing the options trade. So here, let's see how we're going to do this. So if I see that I bought this, let me create an opposite order, right? I bought it, or I sold it for an initial credit of $1.70. I'm going to go create an opposite order, which means to buy it back. But down here, I'm going to go OCO. OCO means one cancels other. So this says that I'm going to buy this thing back to make a quick, let's say 40 bucks. Let's go 50 bucks, right? And then I'm going to go OCO. So that's my order to buy it back for a profit, create a duplicate order. And then this is going to be my stop order. So you go from limit to stop. You always put your stop loss using a stop order. If this thing trades all the way up to 270, so I'm going to risk 100 bucks. So 270. Since I sold it for $1.70, I'm going to sell this for, or I'm going to buy it back at 270. One cancels other, confirm and send. And what's cool about the Thinkorswim platform, it will actually tell you where the price kind of has to get to for this option spread to trigger. So look at this. If the SPX gets up to about, let's say, 68.35, you'll see this order is linked. See how it's linked right here? So I could actually move it up and down together. And we'll watch this live. Let's zoom in here. And this is like playing a game, because options trading to me is nothing more than a game. It's a game that has a certain where you can bet. And let me just zoom in here and make this so that we can actually see the game unfold before our eyes. And you'll see that this trade only required me to use about $400 or $500 worth of margin. So you can day trade a big product like the S&P 500, which has one of the most liquid indexes to trade, and you're trading with the big boys. But as a retail trader, you can actually participate in this market, right? So here it's gone up here. We can see our position right now. We're currently up $5. And the position here, we sold, right? The 680.30 put. So our strike price, we do not want it to get to the 6.830, right? This is down here. We're going to get in the money. Once this, let me just put in my price level. This is where we sold. We sold right here. We only have 45 minutes left in this trading day. This is the one that we sold. The one that we bought is way down here, right? But I'm going to get out of this trade before it breaks through my short strike. So I want to have my order ready just in case. And here, since you guys are with me, I'm going to go to the trade tab, and let's actually, what I'll do is I'll go to the charts tab and I'll detach it. So what you can always do if you have multi-monitors, you can always go in and detach your chart, and you can detach it right here. And that way I can have both open at the same time for you guys to see. I'm going to minimize, or let's squeeze it over here to the right. Oh, hold on one second. Let me do this. And then I'll have my actual trade tab up. Actually, you know what? I'm not going to do that. I'm just going to go back and forth. So here, notice we have an up bar. So what does that do to my position? I'm up about 20 bucks, right? So this is kind of day trading the SPX 0 days options. Now I'm up $20 and I entered this trade at what time? It says my filled order was right there. Here, let me just show you guys on my monitor what I'm looking at. I know I'm talking a little bit fast, but I want you guys to see what's actually possible when you're day trading, and you can actually day trade actual big indexes that institutions trade. And while we're waiting for this thing to hit either my profit or my stop loss, let me show you how you can actually create buttons where you can put your drawing tools right here. So you go my tools. This is a very valuable on each chart, and I click OK. And down here you can see I can put my drawing tools up here. If I want to add something, I just click on this and I'm saying, you know what, I want to add a trend line, text note. I don't want to use a simple moving average. Let's change this to my price level, right? And now I'm going to add another button. I can even put my time frames. So let's say I want to do, actually let me add in my trend line, my pan, right? And so here, if I look on my chart, I'm going to lock it down on this arrow. See this little pin? It'll lock down. So now, instead of always having to go to my drawing tools, I could just move it right here. And now look, it's going up, right? So here on my monitor tab, you'll see I'm up $40, $35. So this thing is moving as it gets closer to my target. And notice, this is a spread. This is not even the futures contract, right? We're getting closer. If this thing gets up, it's going to hit me out. Boom, I'm out. And you guys just saw me make a quick, how much did I make there? 50 bucks, right? I made $50. I'm out of the position, and I was in the trade for how long? Let's take a look here. I was in the trade for 14, what is that? 6, 7, 8 minutes. I was in the trade for 8 minutes. All the S&P 500 did was go from about 6,833. It only went out about 2 points, and I made a quick 50 bucks. And my order got canceled. The one that I had, one cancels other order, you'll see got canceled. So I don't have any more working orders. It hit my target, and now I can look to enter in another trade. If I want to say, okay guys, we only have, what time is it? It is 12:23 Pacific Standard Time. We have another, what, 30, 35 minutes. If I really want to place a trade, I can do iron condors on here, but I'm going to show you something else. Since you guys are here, I'm going to trade the E-mini S&P 500. All right, you can actually day trade futures on options. You can trade options on futures contracts, and this is really cool because it ties up even less margin. So watch, this might blow your minds. So I'm going to show you guys all the different capabilities. No matter what your goals are, what your account size is, I can show you how to create trades that will meet those. So let's say I don't think the market's going to break this high here. Was it 68.94? I could go to the trade tab and sell. So watch. This is the E-mini S&P futures, right? And look at this. They have 0 days to expiration. They have 4 days, 3 days, all the way out to monthlies, right? So I'm a day trader. So I'm going to go in and day trade the 0 days to expiration. If I'm bearish, I'm going to sell the calls. So let's take a look here. 68.93. Ooh, let's see here. Is it really going to break to new highs towards the end of the day on a Friday? The market's right now up 59 points. Let's just take a short-term bet, 6893, and they'll give you the probabilities as well. So I like to go probability. Let's change this to probabilities, and this will be probability of in the money. And then, you know, another way you could do it is probability of out of the money, right? And so if I look at this, I can say the trade here, what's the chance of it getting above 6893? So I'll sell maybe the 6890, 6890. That's a little close. Maybe 6895. Let's see how much that's going for. 6895 is right here. If I sell this for $1.40, right here, let's just do this. Check this out. the margin for this, if I were to sell it naked, would be 251,000. I don't want to do that. So we're going to reduce our margin by buying a spread or buying a call. So if I just buy this call, that's going for 55 cents. That's 10 contracts. You know what? I'm just showing you guys this for demonstrations here. So we're going to go one contract, and you'll see I can collect 90 cents for this, right? 80 cents. But how much am I risking? I'm risking to 45 bucks, make 205. Is that a good risk to reward? Maybe. But here, let me just show you quickly how this is done. I'm going to click. Yeah, I want to click a little more. So ES, you get half the contracts. I can actually do an iron condor. Yeah, let's do an iron condor. Let's say I don't think it's going to get above here or below 68.84. So let's go down here. 68.84, that's selling right there. Ooh. In the next 30 minutes, let's see what happens. That might be a little risk here. Let me try to sell this and then buy the, here, let's just do a $5 wide spread there. All right. And if I'm doing a $5 wide spread, just to show you guys how this thing works, I got to make sure that this is a $5 wide spread. So collect $1.90. All right. Okay, $1.90. That fits it, right? $87 profit, risking $1.62. Yeah, I can live with that. And so it's working. I filled it. So now look, this order right here is filled, and I'm going to put in a stop loss and a profit target just so that you guys can see. I always trade with both. So I'm going to go create the opposite order. I'm going to go into OCO. And then here is a limit. I'm going to buy it. I sold it for, how much did I sell it for? I sold it for $1.75. So I'm going to buy it back if this thing gets down to, let's say, $1. Let's make another 50 bucks. $1.25. So that's my one to buy it back. Now I'm going to go create duplicate order, but this is going to be my stop. So if I change this to my stop, where is it not doing my stop order? Maybe let me delete this and just create another one. Delete this, right? So let's go in here. You'll see the trade right here on the E-mini S&P, right? We're only down 250, right? As long as this thing stays in between. What did I sell? I sold the 68.95, 68.85. Wow, 10-point range. That's 68.95. See, I have my up there. 68.95 is right there, and 68.85, which is right about here. All right, so it needs to stay within that range for this to expire worthless. Let me go in here and say, you know what? I'm going to create opposite order. Oh, let me just clear this all out. Create an opposite order to close it. Here, let me put in my stop loss first, because you always, you know what? I don't think I can put in a stop loss on my iron condor. Interesting. So what I'll do here is I'm always going to be more conscious of the shorts that I'm in, right? So I'm short this one. Here, let's go in here. Hold on. 68.95, 68.85. Create opposite order. If this thing gets up to 275, right? Wait, how much did I sell it for again? $1.75. Let's risk 100. Let's risk 100. But if I risk 100, I want to put a stop in. The order does not allow me to do a stop. So I'm just going to have to watch the trade. I can do that. So watch. So let me just put in my profit target. If I put in a profit target of another $50, right? $1.75 is $1.25. So let's say I want to put it in at $1.25. confirm and send, make this a single order, confirm and send. So here on the chart, right, you can see it needs to get way up here right now for the spread. And it's going within this range right here. So you'll see that my position is now, and anytime you have a working order, you can actually see what it's going for. See, $1.85, right? I sold it. See, I'm up 250 because I sold this position, right? You can see the ES, I sold it for, here, let me just circle this for you guys. If I can get my thing to work. 250, $1.75, $1.80, right? You can see the spread here is $1.80. I sold it for $1.75. It's worth 5 cents more, which is why I'm down 250. The ES is half. The multiplier is 50. When you're trading options, usually you multiply by 100, but because the ES, you actually have half of the profit, which is half of the losses. See how it's worth $1.75 right now? That's why the profit loss is 0, because the chart here is just trading here. If it stays within this range by the end, I will be a winner and collect the full amount, right? But let's just play around here. What is the expected move here? Let me open up my pen. I'm not sure why my pen's not opening up, because I want to highlight certain things. Control delete. Let me just redo my pen real quick. Close this out. Epic pen. Close that and then restart it. All right. Let's open it up again. Right here is going up. Let's see what the position is. I can actually go down here. Look at my orders. Right. $1.75. Look at my working orders. Here, let me put in a working order. There we go. Okay. So I can look at the chart. I can even go over here. Here is worth $1.80. Down now $1.75. So this spread is just going back and forth. I'm gonna go in here. You can even open up this position. Here's the iron condor marked here. Let me close this up. You can see here trade price. Now it's down 750. Here, let's take a look at the different trade prices here. Got it. Good. I'm going to open up this. We'll take a look at a quick chart here on the side panel. And then go to my quick chart. All right, you can switch the gadget over here. And you can always look at here all the different things that you can change it to. Quick chart over here, and then I can see the chart of the S&P if I want to link it to what I'm actually trading. Oh, now we're down $10 because right now here, let's change this to a different time frame. Style, time frame setup. Go to 1 day, 1 minute. There we go. Right? And then let's zoom in. Oh, it's going down, right? If we go here, you can see that the chart is starting to approach my short strikes. What we're doing is we're looking for a bounce up, right? For time decay, theta decay. And since our shorts are right there, here, let me zoom out here. We could actually make this a little bit bigger. I can actually go over here and look there. So we're just waiting. Let me see what my position's at. We're down $5. Again, working order to buy it back at $1.25. It's at $1.90, right? We initially sold it for Here, let me highlight some of this for you guys. I know this could be a little bit confusing if this is the first time you've seen anything like this. Here, let me highlight. This is how much it's going for, the mark. This is how much I sold the iron condor for $1.75, and therefore, if you look at your profit loss, right? See how it's $5. That's typically $5 loss, but it's half. When you're day trading the ES, you don't have to worry about day trading rules. That's what's really cool about this, is that typically when you're trading, you need $25,000 to day trade a 0-day DTE. So people who are looking to get around the $25,000 day trading rule, which they're going to get rid of sometime in 2026. But right now, since it's still in effect, the workaround is day trading the E-mini futures, because the futures, the S&P 500, the SPY, the XPS, they're all the same product. Everything is priced the same. The market makers are all the same people in these markets. So all the volatility, all that is already priced into these options, these bets. So it doesn't really matter what product you're trading. I'm product indifferent, meaning it doesn't matter as long as I get where I have leverage and I know what I'm trading, I know what my risk is. That's all that matters, right? Because if you wanted to make this equivalent to the SPX, you would just trade 2 contracts. If I would have done 2 contracts, then it would be equivalent, because each point would be $100. So now we're getting here. It's getting close to my in the monies, right? Once it gets in the money, right, 6885, you'll see it'll say in your position you're in the money. Right, so I got to buy, sell. I'm down $7.50, down $5. Again, sold it for $1.75, is worth $1.85. Remember, this is only a $5 wide spread, $10. I can't really lose that much, so I'm not really worried. We got, what, 20 more minutes in the markets. Still waiting for this thing to probably rally up a little bit. Once it rallies up is when I'll probably take my profits really fast, because you can actually take profits before it expires. I don't need to wait for the day to end. Oh, one last thing actually is that when you're trading ES, you actually will get kicked out of your trade automatically. Oh, there we go. It moved down. See how now the index just has to go up here. It might kick me out because the clearing house, it's going to clear your trades usually about 15 minutes before the market closes. So I probably have 5 more minutes before this is going to close me out of the trade. But we'll see, right? But I don't really care, because when you trade small, trade often, that's when you don't let your emotions get the best of you. This is a good example of, you see me placing trades. I really don't care. I put the probabilities on my side, right? I put trading small, trade often. I'm risking about 2 to 1. And then I let it go. You saw me place that first trade, made a quick $50. So if this is something that you guys like, I'm going to start doing this more often, because now that I have the OBS stream set up, I want you guys to be able to see what I'm seeing and how to trade how I trade, which is why I created Trade Like Nick, because I feel like anybody can do this. If you know how to trade and you know the mechanics, you know the money management, and you put the probabilities on your side, then you can just set it and forget it. Trade small and trade often, right? Because with probability, when you use math, you just let the probabilities play themselves out. And when you get stopped out, it's okay. As long as you manage your losers and you let your profit targets and you take your profits faster, which increases your probability, that's what we're looking for. So here right now, I'm still looking to get up here. I wanted to get up here so that I can buy this spread back for $1.25. Remember, here I'm down, what, 250 still, right? Not really, right? $1.85.80, right? Remember, here, let me just highlight this. This is what it's going for, right? It's $1.90, so that means I'm down $7.50. I sold it initially for $1.75, right? So if I have to buy it back, sorry, this is my initial position. Right now it's what, 20 cents away. That's why I'm down $10. If this was a typical options contract where it was 100 shares to represent 100, see now it's $1.90, 750, right? You're not really risking that much. And it's only a $5 wide spread on both sides. Remember, you can't lose on both. Remember, is another thing that I'll teach you guys is that when you do an iron condor, right, if this side starts to go down, you can't lose on this side. So one of these sides has to win. So I'm not worried about the call side that I sold. I'm more, just worried a little bit about this put side. So I'm just looking for a little bit of a rally to go up, right? Hopefully this is, I don't know, let's say, is this support level? I don't know, right? Technical analysis just kind of gives you a little bit of a clue of where it might bounce, right? This thing is trading very slowly. It's towards the end of the day here before we get closer to Christmas. Here, while we're waiting, let me show you a couple of other cool things. So if I wanted to add my time frames up here, this is a really cool way to do so. So that way I don't always have to switch between my 1 minute chart, daily chart. I can actually go in here and say I want to add a button, and then I want to go to time frame. Let's say I want to put a 5-day, 5-minute chart on there. I'll save it, and look, I can just quickly go in and look at my 5-minute chart. I want to add another button. I want to go to time frame, and I want to do a daily chart, 1 year, 1 day, right? And click. And so I can quickly just go, okay, what's the 5-minute chart look like? All right, okay, there does look like some support, resistance here. So it probably would have been good just to sell resistance and not even do the put spread. But, I'm just showing you guys what's available. If I want to go to a daily chart, right? This is the dailies. And we all know markets are near all-time highs. These are just contract rollover lines if I don't want to show that. There, go back to the 1 minute chart. So let me add my 1 minute chart on there. Add button, time frame, 1 day, 1 minute. Save it, and there, boom. I can easily just go back to my 1 minute chart. All right, and it looks like we are breaching my short put strike, right? Oh no, it's still above it a little bit, but it's going down. But let's see, because the market can rally a little bit. Let's see what the trade is doing. $1.80, right? It's still $5, right? Not really doing much. It's this spread. This iron condor is still selling for $1.85. It's still going for $1.85. And all I need is a little pop here, guys. Give me a little pop to the end of the day to get me out of the trade, make a quick 50 bucks. Let's go. Oh, of course, it'll always do the opposite of what you want it to do. That's how the markets work, right? The markets will always do what you want it, what you don't want it to do. That's why, look at that. It's going down some more. So here you can see now this spread is worth $2. Oh, $1.70, $1.90, right? What's going on? Oh, $2.30, right? Now you're down 27. That means I know that it's going down. Look at that. See, it just had a big drop right there. So the spread is, oh, it's breaking. Oh man, they are selling it too. All right, and now look, you can see the spread down 70, right? Because now the spreads were $2.90, right, on this $5. Now it's a 50-50. Look at that big bar down again. Let's see if the sellers or the buyers can go in and get some of that back, or if it's going to be a sell. Look at that volume kicking right there, right? Look at that volume. There's big volume there. But anytime you see a big wick, this is how you read candlestick charts. A wick could be a potential reversal, right? It maybe takes out a bunch of stops or something. Now it's going back up. Now what we were down 220, now we're only down what, 22 bucks, right? Because now this spread is worth 225. Again, We're looking for a bounce. Get back up here, guys. Let's go. We only got 15 minutes, and they might kick me out of this trade because the ES will kick you out early before the market closes. So we're just sitting here waiting. What I like about trading options is that you're risk defined, of course, and you're not trading so much directionally. You are, but the stock could go sideways, it could go down a little bit as long as it stays above your strike price, right? Right here, let me just quickly show you guys the strike price, right? We're down 30 bucks. We shorted the what? 6885. Oh no, that's my working order. We shorted the 6885. So theoretically, as long as this thing stays above 6885 at expiration, everything will expire, right? So here, let me just kind of draw that in a little bit. 6885, put it right there. Here, let me make that a little bit darker, edit the properties, make the line a little bit thicker. Let's just go 4. We'll make this a nice bright color. Change this to 6885. And okay, there we go. So we want it to stay above there for this thing to expire worthless. So it's hitting its head there. Come on. Right? Look at that big comeback. So that big red candle already took back all of that in about 2 minutes. Volume is increasing towards the end of the day. Let's see if the bears push it down lower or it goes higher. The position right now is worth what, 235. So that's only down 25 bucks. Let's go back to the chart, right? It's just like looking at a game, right? You're just playing a game of cat and mouse, and seeing if offense or defense is going to win. We got another 10 minutes. Right now, they're driving towards the end zone. Right? Oh, see right here. See how my limit just moved down? That means now the price only has to get up to here for it to hit my profit because time is expiring. See, now we got a nice green candle. Let's go. Let's go. See, you see the monitor tab. Now it's 210, only down $17. Let's go. Come on, break through this goal line. This is my red zone. Get it into the red zone, guys. Push through. Oh man, the back and forth, some tackling, right? Come on. Right? It's 12:48 right now. Uh-oh, now the other team is pushing it down. We need McCaffrey to get through this line. Come on, guys. O-line. Green, green, green. Right, so now we're down here. I know I'm going to be down on this position a little bit more, right? Look, 255, we're down about 40 bucks. So looking for a push up. And of course, it's going to go the opposite way because whatever you hope for, don't hope. Whenever you have too big of a position, if you're over leveraged, that's when you start to sweat and stress. But I'm trading small, trading often. And that's the true sign of when you know you become a trader. When I was younger, I used to trade way too big. And every trade, I would worry too much. But whenever you worry too much, you know you traded too big. But if you're only trading like, 2% risk of your total account value, then it doesn't. Just notice how the limit, it moved lower because time is moving by. Oh, look at that pig. There was a lot of, oh, there we go. Come on. Let's go. Let's push up. There we go. Push up. Come on, baby. Right? Let's hit this strike here. Come on. We're getting closer to my limit. Yes, I like it. Come on. Get me out of the trade. Look at this. If we go to the monitor tab, look, $1.60. Now we're up $7.50. Right? We were down. Come on. We're getting some more. Push. Push a little higher. There, I'm in. Look at that. I just made a quick 50 bucks. right? The iron condor. I sold the put spread, sold the call spread. It got me out. I did have a little bit of worry, a little stress down here, but I wasn't stressing too much because my risk was very limited. And so you can see, quick recap, made 25 bucks on that trade, made 50 bucks on that trade. I was in this iron condor for how long? 27, got out at 50. So that was like almost a 23-minute trade to make 25 bucks. Remember, ES is less leverage. It's a multiplier of 50. So let me just show you what I mean by that. So let's say if I really wanted to, let's trade the SPX. All right, look at this. You can just trade the SPX. Let's say, okay, you know what? I think that the trade here is going to stay below the high. So let's say here, what is the high? The high is right here. Let's zoom in a little bit. Okay, so we got what, 10 minutes? Let's place a 8-minute bet. It's 12:51. Let's say it won't get above 68.40. I can actually go in and place a bet here on the 68.40. 68.40 is going for what, 30 cents, right? If I want to just play, show you guys probability, 68.40 and then buy the 45. You know, collect 25 cents, right? Look at that. Collect $25, risk $4.75, but it has to stay below that, below. So the probability, yeah, it's probably not worth it, but I'll just play for you guys just to see. It's high probability, right? Because look, the working order is I'm selling the 68.40, right? 68.40 is way up here. There's no takers right now, right? Like 68.40, that's saying that it's going to break through that high. Let's just take a look. Let's see what could be. All right, this is closing right here, right? This is the closing time right there. All right, this is my order working right here. Oh, I'm filled. All right, to make a quick 25 bucks. Uh-oh. Let's see, this is where we don't want it to get to, 68.40. And I could buy that. If I wanted to not sell it, I could buy it. So now I want to see some red action. All right, is this thing going to take it to the all-time high? Are we going to close on the high of the day? We'll see. Why did I choose that? Because on the 5-day, 5-minute, right, it looks like there was some pretty, a lot of resistance potentially on that. So that's why I looked at it. Here, let's take a look here. Zoom in. Right, this is the 1-day, 1-minute. All right, now we got a red bar, right? Now it's only up 25 bucks, right? Made another 25 bucks. 67 profit loss on the open. You know what? Let's just get out of this trade. Now, let's just let it expire worthless. Remember, when you're trading the SPX, if you want to avoid the trading rules, right? See, now what are the chances of it? We got 5 minutes for it to break all-time highs. It's selling off again. So this trade, right, is now, up 15 bucks, up 10 bucks. All right, boom, it had that big wick. What's the chance of it getting at 68.40? No, there is a chance. Got 5 minutes. Coming back down, right? If it expires below here, you just collect that 25 bucks. Oh, there it's going a little bit lower, right? That trade is now up, what, 20 bucks? It's only got $5 more to squeeze out. We have, what, $4 in 4 minutes, 4 minutes and 35 seconds, and they're off here. Let's take a look here. right? You can see we got 4 minutes before the market closes. This is the strike that I want it to stay below. And as long as it stays below that, as it stays below that, then you're golden. All right, let's zoom in a little bit more. Let's just make this a little bit bigger, make everything more relative. There we go. So now we want to stay below here. Now we got 3 minutes, right? This is the game, right? The game has 3 minutes left. This is the 3-minute warning. 3-minute warning. Going back down. People that are trying to make last-minute bets here, trying to squeeze something out at the end of the markets. If you look at the trade tab, you'll see, right? You can get barely any premium, right? This is the trade tab right here, right? These are, you're only getting 30, 35 cents right at the money, maybe 5, right? These are more directional bets right here, right? $1.55 expected move is only $4.43 for the next 3 minutes. Right, staying down here. So what's the chance here? 3 minutes left. We're going. Monitor tab, we have 25 bucks. Pretty much we got most of it. We just got to wait for the game to end to lock in that $25 profit. Right? The farther away we're at, the higher the probability that's going to stay below 68.40. It's squeezing, slowly squeezing it out. It's at 68.30 now, so we're 10 points away. What's the chance of this thing popping up 10 points? You never know. It can be, right? If you traded enough, you've seen many things happen. So I don't really take my deep breath until the market closes. We got 2-minute warning. 2-minute warning, guys. Ding, ding, ding. We're going. All right, let's see what it does in the next 2 minutes. All right. While that's going here, let me just put in a couple more of my buttons that I like to look at. My drawing tool, text note, just so that you guys know if I ever want to write something here. If I usually like to put my times on the right side, so if you ever want to move it, you could just drag it. Say my 1 minute, move it up, move it down. Put my text note up here. 1 day, 1 minute. 5 days, 5 minutes, and then it'll just move it up here. Actually, let me move my text note more to the left. Oh, I have 2 text notes. Let me delete this one. There we go. And then here, let me edit this property. Make this, typically I like to make it, here I can make it a dotted line. I like to make it thick just so I know exactly what it is, and then save it as default so that the next time I draw it, I'll know exactly what I'm looking at. Uh-oh, look at that. It's pushing. We got, what, 30 seconds. 30 seconds. Stay below the 6,840. Let's go. 24 seconds left in the game. What are they going to do? Oh, are you really going to show? Uh-oh, we're 5 points away. Are they really going to stick it to me just because the last 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Ding, 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 ding. And they're off. And that is the last print, folks, right? So, SPX, this is cash settled, meaning I locked in my $25. Look at that. Trading the SPX, day trading the options. I made $75 for the day trading the SPX options, just making bets. made 25 for a total of $100. And that is only with a very small account. You don't need a lot. You only need like $1,000, $2,000, and you can make these type of returns if you know what you're doing, right? So for all those people, thank you for tuning in. Hopefully you guys learned something. I plan to do some more live streaming during the holidays. Again, I'm a teacher, so I get 2 weeks off for teaching math. And my motto is using math to make money in the markets, because everything is about probabilities. And when you get into trading options, it's all about turning probabilities into profits. Most people lose money when they trade because they're the gambler. They put on trades that have a less than 50% probability of success. But as a professional trader, you trade with the odds on your side. You trade with the probabilities greater than 60, 70, 80%. I'll show you how to create trades in the near future where you have an 80 to 90% probability of profit. And if you manage your winners early, meaning you're not there to take the entire credit, and most importantly, you manage your losers so that you don't let one or two big losers wipe away all your hard work of your small winners, that's how you are on your pathway to consistent profits. And if you know the power of compound return, you can compound your money month after month. Instead of waiting for years to compound your money, I'll show you how to accelerate your path to building wealth in the markets by compounding month after month. Imagine just trying to compound 10, 20% a month, starting with $2,000, $3,000. You can grow that to 50, 100,000 if you do it consistently and you remove the emotions from the trade and just set it and forget it and play the probabilities, just like a casino that always sells bets where they have the edge, or like an insurance company that sells insurance policies every month, pay out a few accidents, but in the end, you're still net profitable. So hopefully you guys saw a little bit of how I trade, what it means to trade like Nick, and how to put the probabilities on your side. Because in the end, we want to look at our profit loss for the day. And if we can consistently put those on our side where we're making, $100, $200, $300 a day, this is how you can get and break free of the rat race. This is what I teach my students. How do you use money, right, to make, and probabilities to make decisions so that you can put your pathway to building wealth in the market. So everybody have a great weekend, everybody. I'll see you guys back on Monday, and make sure you subscribe, like if you like what you see, and I'm going to do this more consistently. I'm going to clean up my YouTube channel. Right now it's just a bunch of videos. I'm actually going to carefully curate these videos so that you know exactly what to do. And I'm going to work on my website, tradelikenick.com. It's under construction right now. But if you guys want to drop your info or just in the comments, I don't really have that many people that comment. But if you guys want to start commenting, tell me what you want to see, what charts you want to see, what stocks you want to see, and I'll help you create high probability options trades around those. And then we can build a community where we can support each other, see each other, and more importantly, be transparent. I am a firm believer in being transparent, not like these other YouTubers that are grifters out there trying to sell you this and that, selling education, but they don't actually put their money where their mouth is. You can see this is not fake money. This is not a virtual account. This is not paper money. This is real money that you're seeing. And whatever I make, whatever I lose, I want you guys to see it, because I want you guys to see what it takes to be a real trader, not just somebody that teaches it, but someone that actually does it. So if you guys like what you see, subscribe, help support me, and my goal is to grow this channel in the year 2026, and I welcome you guys all to hop on board and just take that leap of faith, because what else are you going to do? I don't want you guys to fall for all these other people out there that try to sell the dream, but they don't actually do it. They make money selling education, but they don't actually make money teaching it. Here, I'm a teacher, I'm a trader, and I'm a coach to help you on your way. So ask as many questions as you guys want, and I'll see you in the next one. Peace.